Ever look at a company's financial report and just, well, wish someone could cut through the jargon, highlight the really important bits, maybe even find a surprise or two? Well, you're in the right place. Today, we're doing a deep dive into Transrail Lighting Ltd. Specifically, their latest performance, the unaudited financial results for the quarter ending June 30, 2025. They just announced these. We've gone through their investor presentation, the board meeting notes, and their press release. Our mission, pretty simple, really. We want to boil all that down to the key nuggets of knowledge, help you understand what Transrail Lighting does and what these results actually mean for them. What should you really be paying attention to?
And right off the bat, there's something that truly jumps out from these Q1 FY26 results. The year-over-year growth figures, they aren't just good. They're honestly exceptional. I mean, you look around, lots of infrastructure companies are navigating a complex environment, right? But Transrail's numbers suggest they're not just growing, they seem to be accelerating, really picking up pace.
Okay, that's quite a statement. Exceptional growth. Let's unpack that. Lay out the headline numbers for us. What core results really show this acceleration?
Yeah, the numbers really do paint a picture of pretty explosive growth and efficiency too. Revenue from operations, it soared. An astonishing 81% year-over-year jump. Hit over 1,660 crore rupees in Q1 FY26. That's up from 916 crore same time last year.
81% revenue growth. Wow.
Right. And then you look at profitability. EBITDA, that's earnings before interest, taxes, depreciation, amortization, it increased by a very strong 66%, up to 200 crore. Profit before tax, PBT, an impressive 89% jump. And here's maybe the biggest kicker. Profit after tax, PAT, it more than doubled, a staggering 105% growth, climbing to 106 crore.
Doubled the profit on 81% revenue growth.
Exactly. And even their PAT margin, it improved by 46 basis points, so just under 0.5% better profitability on every rupee of revenue. For you, the basic earnings per share, EPS, that rose pretty sharply too, from 4.17 rupees to 7.88 rupees.
Okay, so it wasn't just revenue. The profitability metrics are incredibly strong as well.
Precisely. What these figures show isn't just impressive top-line growth, but really efficient growth. Doubling PT on that kind of revenue increase, it signals, strong operational leverage and pretty effective cost management. Looking ahead, this sets a very high bar for the rest of the financial year. It suggests their strategy, their execution. It's really firing on all cylinders right now. It gives them significant momentum.
Incredible start to the year then. So when we see numbers like that, the next question is obviously, where's it coming from? Let's dive into the engine room, so to speak. Their order book, their different business segments. What's driving this?
Yeah, the order book is absolutely key to this story, both the intake and the backlog. In Q1 FY26 alone, they secured new orders worth 1,748 crore rupees. That's a huge 72% growth compared to last year's Q1 intake.
72% growth in new orders. That's feeding the beast.
Definitely. And looking at the pipeline, their unexecuted order book, or UEOB, stood at a really formidable 14,654 crore as of June 30th. That's up 44% year over year. And if you add in the L1 orders, the ones that the lowest bidder on and very likely to get the total backlog bumps up to 15,637 crore, that's a massive amount of future work lined up.
15,500 crore. Okay, where is that work concentrated? What parts of the business?
Well, breaking it down, their core strength is crystal clear. Power transmission and distribution, T&D. That includes substations. T&D accounted for a dominant 97% of the new order inflow in Q1. Railways made up the other 3%.
Almost entirely power T&D for new orders.
Pretty much. And the overall unexecuted order book shows a similar picture. 93% is power T&D, 2% railways, 4% civil, and just 1% in pole and lighting. Now, what's interesting is the geographical split. There's a healthy balance. For the Q1 new orders, 79% was domestic, 21% international. But for the total unexecuted order book, it's more balanced. 60% domestic and a significant 40% international.
That is interesting. So heavily focused on T&D, but a really strong international component in the backlog. How does that specific mix, the T&D focus plus the domestic versus international split, how does that inform our understanding of their strategy, their stability?
Right. You might think that heavy concentration in T&D is risky, but for Transrail, it's actually a sign of their deep expertise. It's their core competence. They provide end-to-end solutions, design, manufacturing, testing, installation, the whole EPC, package engineering, engineering, procurement, construction, and they do this for really high voltage stuff, up to 1200 kV lines, 765 kV substations, plus specialized areas like underground cabling and those new age HTLS conductors, the high temp, low sag ones.
Okay, so they really cover the T&D spectrum.
They do, and what's strategically crucial here is their backward integration. Their own manufactured products, towers, conductors make up something like 65–70% of the contract value.
Ah, so they make most of the key components themselves.
Exactly, that's huge. It reduces dependence on outside suppliers, gives them much better control over timelines, quality, costs. It's a significant advantage. And while T&D is the powerhouse, they do have other verticals. Civil construction, think bridges, tunnels, solar EPC, railways. It provides some diversification, builds out their overall infrastructure capability.
Got it. So strong financials, bulging order book, deep expertise with that crucial backward integration. Beyond the numbers and orders, what about actual operations in Q1? Any major achievements? And what about strategy, leadership, future capacity?
Operationally, Q1 FY26 was pretty busy. They commissioned several major critical projects, like the 765 kV DC lines in Kavta for Adani and Kitchener for Power Grid. These are nationally important transmission lines.
Big ones.
Very big. Also, three 400 kV lines in Solapur for Renew Power. And they pushed their international footprint further, commissioning a 132 kV line in Eswatini, Africa. Domestically, smaller projects, too, like facade lighting in Bhopal, 132 kV monopoles in Bihar. So a good mix of scale and geography.
And any other recognitions or milestones?
Yes, quite a few, actually. Their credit rating got a nice upgrade from CRISIL, that's India's top rating agency, to AA stable long-term, A1 plus short-term. That's a strong signal of financial health. Their tower plant in Deoli got an A grade from Power Grid. They won an award for zero accidents from PGCIL, and even a corporate philanthropist award for their education initiative, Saksharta.
Okay, solid execution and external validation.
Yeah.
What about the team leading all this? Any changes there?
Yeah, some important moves on the leadership front, announced just recently, seems geared towards managing this growth. They brought in Dr. Dharmendra Singh Gangwar as new independent director. He's a retired IAS officer, 36+ years experience, strong finance background, adds weight to the board.
Okay.
Mr. Randeep Narang was reappointed as managing director and CEO for another year, so continuity at the very top, and they promoted key internal leaders. Raman Rajagopalan, who was COO International, is now Deputy MD. Lilipala Suryanarayana, the COO Domestic, is now a whole-time director.
Promoting from within, recognizing internal talent.
Seems like it. And they also appointed a new Chief Human Resource Officer, Mrs. Sonal Raj. She's a very seasoned HR leader. Bringing her in signals a real focus on managing their people and talent pipeline as they scale up.
That all makes sense. Strong leadership, proven execution.
Yeah.
It leads to the question. How do these specific moves, the appointments, the project completions, how do they directly support the company's ability to keep this growth going, maybe even accelerate it?
Well, the leadership appointments are crucial, right? You need experienced hands on deck, people with deep domain knowledge, especially in T&D, to steer the ship during rapid expansion, both here and overseas. That's coupled with successfully delivering those complex projects. It doesn't just bring in revenue, it builds their reputation, their track record, makes it easier to win the next big contract.
Build credibility.
Exactly. And then, to really fuel future growth, they're putting serious money into CapEx, capital expenditure. They're expanding existing plants, towers, conductors, poles, that's the brownfield part. And critically, they're building a brand new greenfield tower manufacturing plant, plus investing in more construction equipment.
So significantly boosting their production capacity.
Massively. Post-CapEx, their tower manufacturing capacity is set to more than double, from 84,000 metric tons per year to 196,000. And conductor capacity, also roughly doubling from 24,000 kilometers to 49,500 kilometers.
Wow. That's a huge bet on future demand.
It is, but it directly supports their ability to actually deliver on that massive growing order book we talked about. It's about ensuring they can sustain and build on the kind of growth we saw in Q1.
Okay, let's zoom out now, connect this all to the bigger picture.
Mm-hmm.
What's the overall market looking like for a company like Transrail? How does the industry environment influence their strategy?
The market environment is, well, incredibly favorable. It's a major tailwind for them. According to a CRISIL report, just the Indian power T&D EPC market is expected to hit around 20.5 to 21 billion US dollars by 2029.
Huge market potential domestically.
Absolutely. And it's driven by some powerful macro trends. India's huge target, 500 gigawatts of renewable energy capacity by 2030. That needs a vastly expanded grid. Then there's projected power demand hitting over 700 gigawatt by 2047, massive grid modernization needed. Transmission lines are expected to expand significantly by 2032. Plus, you have a supportive government policies like the RDSS scheme, the revamped distribution sector scheme, which aims to cut power losses, driving upgrades.
So strong domestic drivers. What about internationally? You mentioned their 40% international order book.
Right. Globally, the picture is similar. The International Energy Agency, the IEA, they're calling for a doubling of global grid investments by 2030. This is to meet renewable energy targets and handle increasing electrification worldwide. So big international opportunities, especially in regions like Africa, where Transrail already has a decent foothold.
Okay, so the tide is definitely rising. How is Transrail positioning itself to ride that wave? What's their stated strategy?
Their strategy seems pretty well aligned with these trends. They want to leverage their technical know-how to expand their core T&D business, both here in India and internationally. Makes sense. They also plan to expand their EPC portfolio into related infrastructure areas. A key focus is growing the market for conductors, especially those advanced HTLS ones we mentioned earlier. And, of course, continue expanding the international business while also enhancing their poles and lighting division.
With all that opportunity and a clear strategy, competition must be fierce. How does Transrail actually set itself apart? What makes them different?
They have several distinct advantages, I think. First, that legacy established in 1984. 4 decades is a long time in this business, builds a lot of experience and trust.
Experience counts.
It does. Second, that backward integration, we discussed their own manufacturing facilities for towers, conductors, poles. That's a big differentiator for cost and control.
Right, the vertical integration.
Third, the order book itself. Consistently growing with that healthy domestic-international mix. It gives them strong revenue visibility for years. Fourth, their in-house capabilities. Design, engineering, even tower testing facilities. They can handle complex stuff end-to-end. And finally, the leadership. Experienced promoters, a strong management team with deep domain knowledge. That shouldn't be underestimated.
It sounds like a solid foundation.
Mm-hmm.
Now, we've talked a lot about growth projects, financials, but it's not just about that anymore, is it? ESG, environmental, social governance is becoming increasingly important. What's Transrail doing on that front? Are they just ticking boxes?
It seems like more than just ticking boxes, actually. They appear quite committed to ESG standards. On the environment side, they talk about minimizing impact, focusing on reducing, recycling, reusing resources, standard stuff, but important. Where it gets more concrete is the social aspect. They have 2 flagship CSR programs that seem genuinely impactful. Transrail Aroja, that's focused on healthcare. And the numbers for just Q1 are quite something. They supported 230 specially abled children and adults, funded 560 cataract surgeries, nearly 2,400 eye screenings, 25 cancer treatments, over 1,400 general medical treatments. They even started free eye care in Sharkin.
That's quite extensive outreach.
It is. And then there's Transrail Saksharta, focused on education and skills. In Q1, they helped 750 students in grades 8 to 10 with study materials and supported 163 people in skill training courses, things like finance basics, accounting software, BPO skills, retail. They also specifically mentioned promoting gender diversity.
And governance.
On governance, they emphasize strong policies and practices, aiming for, competency, sustainability, reliability. The board appointments, like bringing in Dr. Gangwar, also speak to strengthening governance.
It's fascinating how these initiatives go beyond just their core T&D work. It shows a broader commitment, which, as you say, probably helps their reputation and long-term stability, too. Okay, so to quickly recap then, Transrail Lighting just delivered a really exceptionally strong Q1 for FY26. Revenue, profit growth soaring, backed by a very robust and still growing order book. They're making strategic investments in boosting capacity, strengthening leadership, and the whole industry outlook looks very positive for them.
Yeah, they're clearly leveraging that 4 decades of experience, their integrated manufacturing, that diverse order book. They seem really well positioned to capitalize on this huge push for infrastructure and renewables, both here in India and increasingly internationally.
So for you, our listener, here's a final thought to maybe mull over. We see India's huge targets for renewables and grid upgrades. We see the global call for more grid investment. Now think about Transrail's big move with their strategic capex to more than double manufacturing capacity. Combine that with their commitment to making their own key components, that backward integration, and their ability to handle entire projects end to end. How might that combination give them a critical, maybe even a sustainable edge in capturing this wave of global demand for power transmission and distribution infrastructure? Something to think about.